This podcast is brought to you by Blue Guardian, the only prop firm that protects their traders.
Kept on depositing money. I was working already, making money, bringing it into trading, burning it again every month. So it reached a point where this is not working. I'm literally being, sorry, excuse my French, so dumb. After years of losing, you finally you're doing good. So I'm not making hundreds of thousands of dollars. No, I'm living a decent life. I'm making 5, 6, 7 grand a month, sometimes 3, sometimes 4, sometimes 5, and I'm living good. I believe the first time I've seen a 7-figure number in my trading account, that's when I froze. I actually was afraid of executing a trade for more than a month.
Episode 240. Folks, we've got Khaled coming up here on the show, our first trader from Oman of all places. Now, he was recommended by my sponsor Blackbull Markets, who had him as one of their top performing traders. Now, we get to hear his full trading journey from start to finish, and we also get his full-on trading strategy, which is like a 45-minute video where he breaks down, well, it's actually not a strategy. He talks about it in the show, what it is, which is slightly different than a strategy, but could be applied across anything. He uses it to get into 1-minute trades on gold. You're going to find that out, not in this video, but in the next one dropping, where he shares that complete masterclass. It's awesome. In this one, you're going to find out why it's not a strategy. You're also going to find out a great way to get unstuck if you are stuck in your trading. You're going to find out that coming up. Now, other things going on here, we've got a mystery trader hitting the Telegram TN Trades channel. He's posting trades in that channel, so if you want to check that out, there are links under the video or podcast description, and there will be a big reveal of who that trader is sometime in the future, so stay tuned for that. Other things going on here, we've got the live streams. Go and check them out across Asia, New York, and London, and we've also got that Robot Builders Club August offer where you can get a 10k Blue Guardian evaluation with your membership. Now, talking about Blue Guardian, let's hear from my sponsor and get on with the show. Our sponsor, Blue Guardian, is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation. All right, folks, here we are on Trading Out. We've got Khaled in the house all the way over there in Oman. Now, Khaled is one of Blackbull's past top clients, trading a 7-figure fund with them, and we've got him on the show to share his story and give you guys some insights as to what it takes to become a successful trader. So, Khaled, welcome to the show all the way over there in Oman.
Man, thank you. I appreciate you. I appreciate having me in here with you in the show.
Look, we're going to start off by getting your story as to how you got into trading and then go from there. So, I mean, how did it all start?
So it all started basically, it's mostly like everyone scrolling in social media and seeing someone making that bag out there, and looking at yourself and be like, okay, damn, this man is literally making what I make in 2 years, in 1 month. So I want to be there. I want to taste that too, It is good to save my time. It's good for me to have lots of my time free, and that's how it started basically, That's how we all got down to this journey.
And so where did you go from there? Was it a course that you decided to take, or?
No, I tried to take the course. I tried to take the course of that guy, but I asked for a track record because I was studying mechanical engineering too. So everything is based on math and statistics for me. So I tried to get approved. Okay, there is tested data for this system, for the course that you're teaching, but they never replied to me. So I was like, okay, damn, man, I'm gonna start reading books then. I'm gonna start figure out my own way, and that's where it started, actually. That's where the dark side started of my journey.
And this was 8 years ago, right, when you first started delving into it. And so with these, what was the next sort of step, sort of going out on your own into that dark journey? I mean, talk us through it. How dark did it get?
Man, it got so dark to the point that I kept on losing money month after month, month after month. Kept on depositing money. I was working already, making money, bringing it into trading, burning it. And then again, every month. So it reached a point where this is not working, I'm literally being, sorry, excuse my French, I'm being so dumb, with this. I don't even know where this is going, So that's how dark it got, till one day like this, I was like, how can I actually get better with this? Like I've read a couple books. I've read the Japanese candlesticks. I've read all of these. It's not working for me. Like, okay, what's the matter? And I actually decided to quit. Back then, I decided to quit till it one day it clicked like this. It was luck. I had like 2 grand, 3 grand on my trading account, and I made 14 on euro dollar. 14 grand. It was just trending up, and I was so lucky. I was executing these lots. And back then I had a leverage of 1 to 888. Was this well-known broker back then that offering this kind of leverage, and was just like executing, like buy. It was just my goodbye moment. I'm done with this shit, man. I'm back to my studies, back to my field, and that's it. And it worked. I made a roughly 14 to 16 grand. I took 4 out, and then I lost the rest. So that moment where it got me even deeper with the market, because damn, I've been losing, but for the first time within a year, I finally tasted the taste of winning. And I can see the money in my bank account. So
at that point, did you like, had you made back the total amounts that you deposited with that 14 grand that you made, or was it not quite as much?
No, I didn't make it back because I only withdrew 4 grand and I lost the rest.
Yeah, but even so, if it's withdrawn a lot, would you have been back at break even, or would you still have been down the red?
No, it would have been break even. Actually, it would have been break even.
Okay.
Because it was like 14 to 16 grand, and I was already trading for 6-7 months. I was already depositing 2 grand every month, so it was like roughly an equilibrium, like a break even point between my losses and my wins.
And so can you explain to the guys, I know it's probably a long time ago, well, it is a long time ago, and you may not remember exactly, but I mean, what on earth were you doing at that stage? I mean, what kind of strategy? Did you even have a stop loss, anything like that? You can remember?
I still remember, yeah, definitely I still remember, because it was just so ridiculously funny. So it was, I looked at the chart back then. I was like, okay, this is a candlestick. This is a Japanese candlestick. So I went literally on Google and I wrote down Japanese candlesticks. So I got the first book, and the results popping up is like this Japanese candlestick mastery or something, Still have the book somewhere. It's either it's in my house in Berlin. Still have the book, like the big book. So I was like, I started reading those candlesticks, and based on that, I built a simple strategy, which is I had like my hammer and my hanging man, So if I have a hanging man on top of a trend, I'm gonna just sell. No, forget stop losses, man. Forget stop losses. I didn't even know what that means. I didn't even know what that means. Back then, if I see a hammer down below, like, okay, I'm gonna buy. Don't tell me about supply. Don't tell me about demand. Don't tell me about nothing, because I absolutely didn't know nothing about nothing. I only knew hammer, hanging man, and engulfing candles. I didn't even know what those candles mean or represent. I studied the criteria, because let's face it, this is what the market gives you to. This is the kind of material the market gives you. They don't tell you how, they just give you criteria. And that's what I got. Like, okay, engulfing, it should be closing like this. In case I got engulfing, I must wait for the second candle, to come back a little bit, retrace a little bit on it, execute, sell, buy, and if it works, it works. If it didn't work, it didn't work. And then after that, I got to know my stop loss. Because I was just losing money, making a little bit money, losing too much money. And I was like, okay, damn, how can I solve that? And that's where I got to know that, okay, there is a stop loss. I was like, nah, this is just too dumb. I'm just being way too dumb with that.
So you added a stop loss in, but I mean, obviously there must have been a learning curve that, if you, I suppose, okay, well, let's just go down that route. You add a stop loss in, what do you then discover after adding a stop loss and then sticking with this, hangman / hammer candlestick pattern entry? What happens then?
After that, what I figured out is the trend. is the trend. How does actually the trend move? Based on what? Supply and demand, prices, and the way the price behave around a session, that's what came after the stop loss. But looking at my experience back then, during that period, it was so dumb. I was so basic, I was so naive. So when I read this naked trading book, it was just like you giving me an overdose shot.
Yeah. Naked Forex or whatever it was called. Was that the book?
Yeah. Naked Forex.
Yeah.
Forex trading, something like that. So it was like you giving me a whole overdose shot. Because, dude, I'm so basic. I'm so naive, Like, I'm so naive to the point, like, I'm telling you, like, I know some candlesticks. I know the hanging man, the hammer. I just got to know my stop loss. And all of a sudden, I'm jumping into some advanced material. Like, it's so advanced. It was so advanced for me back then, It was so advanced, like an overdose shot, literally. So that where I took another, like, deep curve in my journey, because I was like, okay, wait, this is not working. Stop depositing. Take these books, put them. I'm literally every day I'm gonna study 4, 5, 6 hours. I'll go back from my university, come back, keep on grinding till 3 a.m. in the morning, 4 a.m. in the morning, sleep, go back to university. I took that for another year. So I stopped trading. I stopped placing live money trades. Good. I even demo nothing. Just looking at the chart and start like to figure out, learn, figure out, apply, learn, apply, and observe. So I start being a rational human being. That's the point where I start using or utilizing my educational background. I'm putting it out there. Like, okay, I need observations. I need to learn. I need to be an apprenticeship. Like, I need to be a practitioner in this. So I need to learn, apply, observe. That's another year of my trading journey.
And so with that, like learn, apply, observe, which I think a lot of people do the learn bit and they don't do the apply and the observe bit, which I think is kind of key. What things, and usually, these books that you get don't out of the gate give you the solution. You need to sort of do that extra work to find out. I mean, how did things sort of piece together for you across that course of that year? What came together for you? What elements?
I believe observation. There was this guy. So I never had a mentor in my life. Good. I never had a mentor in my life, but I had a friend of mine who was working for Arab Bank. It's one of the biggest banks in the Middle East. Good. And this guy was a head of a dealing department back then, He was like literally a friend of mine. He's top dealer in the Middle East in that bank, And he's like my age, dude. So I called him. I was like, dude, I need some help, like help me out. He was like, okay, I can give you one advice, use your educational background. I was like, okay, thank you. That's so helpful. What's next? He was observe. I was like, okay, I'm observing. How can I observe more? Like, what can I do with the observation? He was literally, instead of you watching a movie, just open the chart on the lowest time frame and look how the market is moving. Look how the market is behaving. So he was like, okay, now he learned all of these concepts about supply, demand, you learned how the trend is developing. So he was like, okay, look at these key levels. Look at the price. When the price is reaching the supply, how's the price is behaving? When the price is reaching this demand, how's the price is behaving around this demand? Because from there, you can build another concept. So not even my friend gave me a direct key to, not even my friend gave me a direct key. He was like, observation. What is observation? He was like, you need to look at the chart, how the price is behaving around supply and demand.
All right, folks, I'm here at Blackbull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Blackbull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
And can you remember some of the key things you learned from just observing? Because I think that's quite a good little trick is to, especially if you're starting out, go to the 1 minute time frame because it is the fastest moving, right? And
Yeah.
you're going to see more price action, and it is fractal. So, you know, going up the timeframes, it's kind of the same. You're going to see it quicker. So what can you remember being some of the things you may have noted down and sort of added into a trading plan?
It's a lot, actually. It's a lot. Like the things that I figured out from the observational period, I still use till today in my journey. You know, one of them that was like shocking back then for me. All right. I'm still using the 1 minute time frame, by the way, till today. I still trade on the 1 minute time frame. I don't use any other time frame. Good. For my trading, for my execution, I only use the 1 minute time frame. So the way that led me, it made me more comfortable trading even the higher time frames from just observations, because as you said it, you're gonna see faster price action movements on the 1 minute time frame, but then you're gonna take these movements and compare them to the higher time frames. You're gonna figure out one thing, dude. It's just time. It takes time till it develops. That's it. Literally, that's the only difference. So if you're taking this 20 pips move on your 1 minute time frame, the same price action movement, the same behavior, you're gonna see it on the daily time frame, but it's like at 2000 pips. But it's gonna take you, instead of 20 minutes, it's gonna take you 2 months for it to be fully developed. So those one of the great big key elements that changed my trading, because back then my risk to reward was like 1-to-1, and sometimes in negative too. You know, sometimes I'm risking 2 to get 1. But when I actually got to that level, when I got to that point to start comparing between the lower time frame and the higher time frame, that's when my risk to reward ratio actually jumped. Like I started making 1-to-6, 1-to-7. That was a huge jump. I can actually show you on a chart if you want to. Like,
I'll tell you what, we'll do a little chart share afterwards at the end and see what that looks like. But it makes sense. So you were basically seeing stuff on the 1 minute time frame that you then could see on the higher time frames, and you're like, well, if it's doing that on the 1 minute and it's making let's say a 10 pip move, if I see the same thing on the higher time frame, but then get in on a 1 minute entry, I've got a chance of getting a 100 pip move. Yeah.
But yeah, you're literally sitting in my head 4 years ago. You literally now what you said was in my head 4 years ago, and that was another dark story in my life, because it wasn't simple. We look at it as it's simple. We say it out loud as it's so simple, but damn, man, wait. How many 1 minute candles there is in a 1 hour candle? 60.
Yeah, 60, yeah.
4 hours, that's 240, right? A daily. So if you're looking at like a daily time frame or a 4H time frame, and you're looking at the same movement to develop, and you want to execute on the 1 minute time frame, you need mind toughness, one, discipline of steel. You know, you need a discipline of steel, because, dude, I can't tell you exactly the statistics, but almost 50% of my trades were running into 50, 60, 70 pips, break even, continue.
Nightmare.
Can you
It's
feel
always a nightmare, isn't it? Yeah. I've been there, mate. I know.
Can you feel the frustration?
Yeah.
Dude, I just struggled with that. I was profitable back then, you know. I just struggled with that in a way that, okay, I want to hold these moves, but at the same time, I want to also be making money, you know, like, because I'm holding these moves and I'm not making money. Like, I'm literally like, you execute, go away for a couple hours, come back, check your desk, boom, you're plus 50, 60 pips. Okay, fine, I'm good. You put your stop loss at break even. Sometimes you don't even put us a break even. You keep it 10 pips away, 12 pips away. You know, it depends on your stop loss. You come back after an hour, 2-3 hours. Oh, it's zero, or sometimes it's minus.
Hmm.
So but it didn't take me a long time for that. It didn't take me a long time for that because I already had a good experience. I was already intermediate back then. I wasn't so professional. I was intermediate. That was 2018. That was back 2018 at that point. So that's where I started building my second model based on observation. So what I've done is I always journal, I always keep my data. So what I've done is I took all of these trades and looked for similarities. So I was looking for a pattern between those trades, like a similarity. I was looking for that odd, I was looking for that odd between all of these trades. What's there? What's the one thing, just one thing, not many things. What's the one thing that's similar between all of these trades that we're running into profit, 20 plus pips, then coming back to stop loss or break even, good, then continuing in my direction. And that's where another piece of my puzzle, sorry, got resolved. It's like I scratched, like a lottery ticket. It was the volume of trading sessions.
Ah, right. The volume of the trade so the volume of the whole trading session, or what do you mean by that?
The new sessions. So I was living in Berlin. So I would wake up in the morning and trade in London Open. Yeah. But I knew that, okay, London opens at this time, but I never actually knew the sort of volume that brings to the market. So I'll be an hour earlier than the market open. I'll be in a sell, it moves in my direction. Okay, the market opens, it moves all the way up, it grabs all the liquidity or these orders or the sells, gets more sells, moves down. That was my biggest aha moment in my history. That was the biggest aha moment in my history because it was a mystery. It was a mystery for me. It was a big mystery for me.
And so what was your solution to overcome that issue of getting stopped out at breaking even every time or not taking profit?
All right.
So can I just ask the question of when you were 50, 60 pips in profit, what kind of risk to reward would that have been? Was that like a one-to-one or?
No. At that point, that would have been 1 to 6, 1 to 7.
Right. Okay. And you let that come back to break even. That's a shocker. Yeah. Okay.
Yeah, exactly. So at that point, my stop loss was already 15 pips, 10 pips, Nowadays, my stop loss is around 3-4 pips on gold, by the way. So at that moment where I got to know myself, as a trader. Because it was so dark to the point that I was actually start doubting myself on if I'm profitable or not. Because, like you look at your win rate, it's high. You look at your trades, they're running so deep, like you get good profit, but it comes back to your break-even point. So then you look at these trades where you close 30, 40 pips, and then after an hour, it just runs directly into your TP, So that sort of built a whole new block of confusion. And confusion is good. As long as you're confused, that means you're thinking, that means, okay, you need to figure out something. So that's when I learned this concept from a professor out there. She was teaching me social competence in my university. Good. So she was like, okay, whenever you're confused and you don't figure a solution, that means that you're confused with yourself. You don't know yourself. You need to understand yourself. So that's where I took like some meditation trip. I took a trip to Spain, to Malaga, to visit friends, and just took some time off chart, came back. I was like, who the heck am I? Like, yeah, I'm Khalid. Okay, thank you. Okay, but how do I react? How do I respond? How do I think? If I'm in profit, if I'm in this. So that's where it started. I started asking myself questions, and each question will bring a new question. And that's where I figured out that, okay, I'm a behavioral trader. So because everyone was asking me like, are you a swing day trader, a scalper? I don't know. I'm none of these, I don't know. I'm none of these. So that's where I figured out that I'm a behavioral trader. And based on that, I built a model, which is, it's not about holding, it's not about cutting. It's about literally just sticking to the trend. I'm gonna move with the trend. I don't mind. I'll move with the trend. I'm gonna be taking partials along the way, whether it's up or down. I don't mind. And I have a runner. If it works, it works. If it doesn't work, it doesn't work. At the end of the day, if it works, thank you. That's an extra 1%. If it doesn't work, that's nothing. That's a break even, but I still made 4%.
Right. So you were still, so at that point you'd worked out, I'm going to take the 6R, which, I mean, why wouldn't you? And you're going to let the runner do the work, which may get stopped out at break even. So you did, so I suppose you didn't really, and I mean, I thought you were going to say, and this is something that's crossed my mind, is would you take the 6R at full profit and then put another order at break even?
It can work too. Like if you mean like, okay, you want to,
I'm literally saying like you're gonna say this is my entry level. I'm gonna take the profit, and then as soon as I take the profit, I'm gonna expect it to go back and hit my break even, probably to the pip, and then go back and do the run. I've actually thought about that myself. Like, is that a valid strategy? It seems like you want to do it, but you don't want to do it, kind of thing. Did you ever think along those lines?
yeah. I actually had a trip about that. And it's not just that. I built a pattern too. I built a methodology based on my trades, my journalized trades. And I was like looking at my losses, okay, and my break evens. And I was like, okay, what if I reverse order my trades? Like, okay, let me simplify it. So the same way you say it. Hit TP, then it's gonna come 100% to my break even. So what I can benefit is I can get a buy and I can get a sell.
Right. Yeah. So hedge that break. So if it loses, then I'm going to sell, or you're going to buy and sell at the break even point.
No. So you bought, right? Let's say like you sold. Let's put it on a sell example. You sold. Good. And that sell, it went down. It hit your full TP, right? But you're used to what? Your statistics say what? That the trend most probably up to 80% of the time is gonna go back to your entry point. So what you can benefit out of that is I can buy from my TP.
Yeah, okay.
I can close it at my entry.
Yeah. Oh, that's another way you could do it. Yeah.
But I tried that. It worked, but at the end, trading comes down to simplicity. At the end, trading comes down to the fact that, okay, you look at yourself, how much money I want to make, how much money I need a month. That's where I need. It's not like a gambling machine. It's not casino. It's not poker. Although I play poker, and poker helped me out a lot in my trading career, especially in the risk management side. But trading is not poker, actually. Good. You need to keep it simple in a way that it's not actually interacting with your own piece. So the best way to do it is like, okay, you got trade out, ciao, man. Go live, go figure out your life, go do whatever, go play billiard, go play PlayStation, go shoot, go swim, go do whatever, go hike, go do whatever you want to feel like doing. It's just not good. I've tried it. I've had trades. I've had days where I be executing 16 profitable trades. But for what? I'm just consuming my own self. I'm just consuming my own self. And it happened in 2021. I actually took a break for 6 months in that year because I was like, I'm done. I can't. I literally can't,
I mean, we're going to get onto your trading day in a second, but I mean, before we get there, and sort of find out, why it was so intense. I mean, how did you go from that intermediate trader, like where, you were making money and stuff, to getting to the point where you were, into that 7-figure realm?
Honestly, what got me there is backtesting. Yeah, is backtesting. backtesting in a way that I was going ham, I was literally going ham on the charts. Okay, I was like, okay, it's working out. I'm profitable. So it took me 3 years till I stopped, became dumb, and became like an okay trader. I became an okay trader. Like, okay, if you ask me, okay, what are you? I'm an okay trader. That's who I am. So from there, after 1 year, 2 years, I was like, okay, I'm good. I'm good now. Like now I'm making it. Now I'm good. Now I'm not working. I already studied finance afterwards. I studied finance, economics, so investment management too, and behavioral finance. Like I hold 4 degrees in finance. Good. So that it's another story for another day. But that's what got me from being intermediate into the position I am in today, is the fact that I went out there. What I use my first profits for is actually paying for my tuition fees for my private university in Berlin to study economics, finance, behavioral finance, investment management. So I was like, okay, now I have a craft in my hand. Now I have literally a craft in my hand. I have a craft, but with no freaking evidence. The only evidence I have, my burnt accounts and 2 years of experience I'm living out of. That's all I have. So how can I build a whole career out of this? That's how I thought about it. I went in Germany, we have like education consultants. I went to one of these, paid them like 100 euros an hour. I was like, okay, I'm doing this and this and this and this. How can I build a career out of this? He was like, it's better to study economics, finance, etc. I was like, do you have a brochure for top tier universities in Germany, who teach these kind of stuff? They were like, yeah, we have one. I took it and I started contacting all of these universities. I was hyped. I was so, it's finally after years of losing, you finally you're doing good. So I'm not making like hundreds of thousands of dollars. No, I'm living a decent life, I'm making 5, 6, 7 grand a month, sometimes 3, sometimes 4, sometimes 5, and I'm living good. I can pay tuition for any private university. I can handle my stuff. I can push myself to the next level, And I wasn't paying rent, like my house is my parents' house, so I wasn't even paying rent back then too. So it was like no expenses. So I started contacting all of these universities, and I went for orientation days because I want to check the place I'm going to study in. And I find a university. I found one. It was like the one I graduated from. I looked for the program. Okay, interesting. Economics, finance, investment management, and behavioral finance. And that's the point where my whole perspective shifted from just an average retail trader into a whole career, I just started looking at it at a different scale, because what the university offered, you didn't have just professors teaching you. The same professors who are teaching you are actually businessmen, entrepreneurs out there. You had hedge fund managers putting up 2 weeks, every 2 weeks, 1 week, giving you a lecture about something. You had like bank managers, you had dealing department managers, you had risk management managers, It was like, the university was built in a way that, okay, we're not graduating employees. If you want to become an employee, it's your decision. We're building you in a way that you become the employer. So it was a great experience. And looking at all of these people, I was like, damn, none of these people, I've seen people who manage hundreds of millions through my university, and bro, none of them know how the chart looks like. None of them.
And can you explain that in a bit more detail? Why don't they?
They don't care about the chart. They just, man. So when you are at that level in your life, you're data driven, You're data driven more than anything else. You focus on data. Good. And the way they do their investment is they invest in stocks, they invest in cryptocurrencies, etc. Back then, like Bitcoin was like they're one of their major investments. And all of these investments, if you look at the chart, is useless. Yeah, the chart is good. Technical analysis is 100% is good. But for such major investments, what matters the most is the macro image, is the fundamentals of the project, the fundamentals of the stock, etc. So I've seen them like managing all of these money. Even I've seen people, I've seen some hedge fund managers just like having a portfolio of euro back then. I still remember it. Euro was trending in 2018 to the sky. These people had a whole freaking portfolio of euro, a whole basket of euro hedged against dollar. And it's not even a chart. When I told them about chart, they were like, what chart? Economics. It's just simple economics. It's economics.
So how did that experience, which sort of sounds a bit back to front in a way, because most of the guests I have on the show go to university and either quit or do something else in university and decide to do trading instead because they don't want to work a 9 to 5. And I suppose with your university being a more of an entrepreneur university, it was probably quite a good move. But can you tell us what happened when you left and how did it sort of all transition from your retail trader to the sort of more, I suppose, wholesale trader?
Man, I kind of had a tough period a little bit to adjust my mental level, you know, like the way I see things, the way I look at money too, you know, the way I look at money. I'm managing, like at that point I was managing what, like 5 figures. Like I had like 20, 25 something in my trading account. And then it started growing and I started getting funds from out there and started managing those funds and growing my portfolio. And it reached to a point, it was like, I believe the first time I've seen a 7-figure number in my trading account. That's when I froze, actually. That's when I froze. I actually was afraid of executing a trade for more than a month. I was afraid of executing a trade. Out of a sudden, my 1% is $10,000. I'm used to execute what? I'm used to risk what? $500, $300, $400. Out of a sudden, I'm risking $10,000. You know, which is huge for a kid at my age back then. You know.
And so, what do you do? How on earth do you do that? Like, I mean, when you've got $1 million account and you're risking $10,000, what happened? How did you approach it to overcome that fear?
Basically, yeah. That's why I always say education is important in life. Never believe in dropping out of university or education. You need to educate yourself based on what you love and what you want to do in your life. That's how education will help you. What happened is I emailed my professor, my behavioral finance professor. You know, he was already teaching in LSE in London Economics School, blah, blah, blah. I emailed him. I was like, I'm struggling. He was like, okay, give me an hour. I'll finish my lecture and we can. I made him a lot of money though. I made my professor, I made him good money. So it was a challenge between him and I. So I was like, I'm struggling. He was like, give me an hour. I'll finish up my lecture. I'll hit you up. All right. He emailed me back, free for a Skype. Yeah. We talked. He was like, yeah, what's up? I was like, I can't. I was literally dreaming about this day where I managed this amount of money. And now I have it. It's been a month. I can't execute a trade. It's like, I don't know nothing. It's like, I'm so afraid of executing a trade. I don't know nothing about anything, you know. It's like, I don't know how to trade anymore. It's like, I'm so afraid. My confidence is below 0, you know. He was like, all right, relax. He was like, what did you learn in behavioral finance? What I learned is basic. Traditional economics assume that human beings are rational beings. When behavioral finance, modern economics assume that human beings are not are irrational, indeed irrational human beings, and they don't take decisions to increase their utility curve. It was like, okay, afterwards, mental accounting. He was, okay, I was like, how can I integrate mental accounting in my MT4? It was like, don't look at the money. It was simple. Don't look at the money. Don't look at the profit. Don't look at all of that. It was like, you think about percentage. Keep on doing that. Don't look at the money. It was like, okay, plus add your poker experience in that, you know, build your house money. It was like, start building your thresholds using percentage. Once you build your threshold, if you feel like looking at the money, then you have house money where you can build and risk out of, which is a threshold. You know, it was simple words. It helped me out, but I didn't come back directly and start risking 1%. I started risking 0.1, 0.2, 0.3. You know, I literally have about $1 million account, and I'm risking 2 lots, 1 lot.
Right, okay.
On a 10 pips stop loss. Yeah.
Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot. Well, the thing is, and I suppose, because I mean, I know people, you know, trading more than $1 million, but when they're getting huge, you know, accounts and wanting to get a lot of positions on, they've got to, you know, it's going to take them a while to get it on, because there's just not, you know, 400 lots on the other side of the trade that they want to take. So it's going to move the market every time they put an order on. I mean, did you get to that point where you were like, okay, well, now we got to sort of step it up a little bit, and we're not going to be able to get our orders on, and we're not getting filled at that price. We're losing on slippage and all that sort of stuff?
Yeah, that's the moment where I moved out of a one big broker out there. He's a well-known broker out there. I moved out of that broker because of that. It was hilarious. You know, I was already making money. I was a VIP client. And I was not just making any money, you know, like I can later on I'll show you my track record. Like I have an outstanding skill, you know, I have an outstanding trading skill. I sharped it so well, and I still sharp it every day. So I started looking at things, you know, and my spread on gold is normally 1.2 on average. Good. So I started looking at the spread is I'm executing, and I'm minus 3 pips. So there is hidden spread. Good. First of all, there is a hidden spread. So at the same time, I have another account with different broker. You know, I told you I diversify my risk always. So the same trades are being taken on different accounts too. You know, so that's the first thing. Then slippage. So I'm noticing slippage. There is no news, nothing, no volume coming in. Stop loss hitting. It's 10 pips. It's minus 16. So I was like, first week it might be just market condition or liquidity condition for them, you know, because at that point in my career, I already worked in a broker, you know, I already got an internship in a broker, in a bank, etc. After like I took finance as a career in my life. Good. So I was like, yeah, they might have just liquidity matters, liquidity issues. You know, it can happen. It can happen to the best of us. I've seen it. It happened. So I was like, I'm going to give them a week. No, after a week, if it's not solved, then they're playing around with me. Good. Because you're looking at the volume. So if you're looking at 16 pips, you know, if you're looking at 16 pips coming from one lot, it's different from coming from 100 lots. You feel me? There is a huge difference. Like there's a big difference between the gap, you know, like between 1 to 100.
Yeah.
You know, there is like 16,000 minus 160. Good. So they would literally they might be running the whole operation based on your slippage too, you know, no joke, like for a week. So it kept on happening for a month. And that's when how life is hilarious. I decided I withdraw all of my money. They blocked my money because they didn't want to. They didn't want me to leave. And it's the way the brokerage industry works too. It's based on deposits. They need deposits. If you get such a big amount of money out of the company, they need to treat you like a king. They're gonna club on you and try to give you comfort you and make you feel like, damn, man, Cam, I'm the best human on earth. Like, you're our god. But that didn't work out because I was like, no, I'm fed up. And if I'm fed up with something, I'm fed up with it. That's it. And that's why I love Blackbull's market, because these people are the most transparent people I've seen on earth. That's
I'll
it.
agree. I'll have to agree with you. They're very transparent.
100%. So, and that broker was really, it's like number one out there. It's like pretty number one out there. And what's funny, I was a VIP client and I never knew the head of support department. They treat you like trash. Sorry, excuse my French. They don't treat you as like you matter. Even though you're a VIP client with them. You don't even know the manager. Like, you don't even know the board of directors. You don't even know the officers. You don't know the management department. But once I withdraw my money, I got to know the owners, bro.
Yeah, exactly.
I got to know the owners. Well, I was like, no, I'm out. And that's where my relationship with Blackbull Market started increasing back then. Because I took the money, took everything to Blackbull Market. Brought the investors, brought my own money, or Blackbull Market. Let's work.
Cool. Well, it's a fantastic story. Now, you did mention that you took a 6-month break because you were just taking 16 trades a day. I mean, what was your trading day looking like back then? I mean, can you walk us through that?
Yeah, at first, I would like to elaborate a little bit on that. I didn't just take it because I was exhausted of trading. I became a father.
Oh, yeah, fair enough.
I became a father, and I just got married. It was like I got married to my best friend and my girlfriend, after 6 years, of relationship. And then after a year, I became a father. So I didn't know what the heck I'm doing in my life. I didn't know what's up. The first time I've healed my baby and we came back home after a week, I was like, wait, what is this? I'm confused. I can't understand what I'm doing in my life. I'm not even sleeping, There is no sleep. You definitely went through that period. There is 100%, there is no sleep, and I started getting too overwhelmed. Zero focus. I'm always foggy too, and I'm stressed too. At the same time, I'm stressed. I'm all of a sudden, I'm responsible for a new life, all of a sudden I'm responsible for a new life, and I'm still trading too, and still making money, but what I've noticed is I start doing some mistakes. Like, we all do mistakes. We all lose. We all lose. I know my losses. I 100% know my losses. And I love losses because they teach me. But you certainly know, you definitely know when you're doing a dumb mistake. That's not a loss. That's just me being dumb. So once that's happening for one time, 2, 3, 4, 5, okay, you'd be like, shit happens. Adjust. Learn, keep on moving. But once it keeps on happening for a month, don't get me wrong, you're still making money, but you see the pattern of these dumb mistakes start to increase. That's when you need to step back and you need to start your life again, because the way I've built my life is so different than now. Now I have a whole freaking house, a whole freaking family. Before I was just on my own. I want to travel there, yeah. I want to do this, yeah. I lose all my money. I don't care. I'm gonna go back and work and start something else. But no. Now I have a daughter. Now I have something to think about in 20 years. Her education, her house, her blah blah blah. So she doesn't need to take loans, no student loans, nothing, because it was just so overwhelming to a point where I broke, man. Bro, I had to take a break.
Yeah,
I was
fair
like,
enough
no,
too. Yeah.
I'm
I mean, we'll dive into like I suppose some more questions are related to how others listening to the show could potentially I suppose things that you've learned across the course of your journey that you could impart on them who are looking to make it in trading. So I mean, have you got any sort of like, I suppose if there was 3 things you'd recommend they do, what would they be?
me being me now, the most 3 important tips I can give. First, you need to study your own self. You need to study your own persona. You need to figure out your own self. How? You need to know how you behave through certain events, like when you lose, when the trade comes back to your stop loss, when the trade comes back to your entry after it goes into a little bit of profit, when you're on profit, when your trade hits TP, you need to understand how you behave through these events. If you observe and record the findings of these events enough times, you're going to reach a point where you can control your own behavior to a certain limit. We are not computers, we're humans. We all have a human error, but you can control your own behavior to a certain limit. Good. That's the most important thing I can give. That's the most important thing I can give. Study your own self, because after all of these years, the way I look at trading now, after all of this money invested in, after all the degrees I have, the work experience I had, the money I managed, where I am now in my industry, it's just a video game. It's just a video game. It's all mental. It's all mental. It's all in the head. It's all about you. It's all about you. Second, risk management. Try to approach risk management like poker player. Get some house money rule managements on how poker players manage their money, manage their bets, manage their bot. That's really important, really important. Different capital sizes, different approaches. There is nothing like I'm risking 1% on a $10,000 account. I'm risking 1% on $100 million. There is nothing like that. Different accounts, different approaches. You need to be smarter and wiser with your money. Because if you talk about risk management involves what? Involves losses management, stop loss management, entry management, partial management, right? Profit management. And you got what? You got the most important one, house money management. The threshold you build, how are you going to manage that? Because for me personally, when I start trading, so when I start my year, I start like, let's say I have a couple of $100,000 in my trading account. I start my year, I made, let's say 40, 60 grand. Good. What I do with that, okay, forget my initial balance. I don't even know about it anymore. It's just margin. It's just, I'm using it as margin for the lot sizes I'm opening, If it goes back to my balance, then there is something wrong I'm doing something wrong. I should never go back to that break-even point, because now I'm looking at my capital as it's 60 grand, but with a purchasing power of 300 grand. You get what I'm saying?
Is that because of the 500-to-1 leverage? Yeah.
Exactly. The margin.
Yeah.
It's just the margin. And the third one, which is really important too. If you look at all of these professional athletes out there, what's in common between all of them?
I would say, sorry, go on. I missed that. I spoke over you. Was it training?
Oh, okay. You can say it.
I was going to say they practice.
Exactly. That's it.
Yeah.
Till now, I practice 2 hours a day. Till now, I practice. After 8 years, I'm in a good place I don't even need to trade no more in my life. I'm good. But till now, I do practice 1 to 2 hours a day.
And what's that practice entail for you? What would be a practice routine?
Backtesting. So They are not 3 tips, 4 tips. You get? You need to focus on one pair, one session. That's it. So that's how you can practice now. So the best way for me to practice, that's what I built based on my own persona. You get? So I'm a person who I can scalp, I can day trade, I can hold positions for months. It depends on the market condition and it depends on my objective out of the market and what's happening. Good, but mostly what I do is I'm a gold scalper. That's my definition, that's my status. I'm a gold scalper. I scalp gold most of the time. So how to do so, how to be efficient in that is by focusing. I focused only on gold on one session. Okay, what's the objective of the one session? Why I need one session and which session? For me, it was in New York because while gold moves in a couple minutes in New York, it moves in an hour in London, it moves in a couple hours in Asia, pips wise, pip count wise. So it's more risky, yeah. It's more risky, yeah, but it's the way I'm built, I can handle that. So it's risk parameters is different from one person to another. So that's why the first step, you need to know yourself. You need to understand and really study yourself for you to reach this point. And then once you reach this point, that's where you practice every day. Let's say, for instance, what I do is, so 1 hour before New York open, I put up on the chart till 1 hour after New York opens. That's my 2 hours window. That's where I get the trade. That's where the market is most volumatic and volatile. That's where you have the market is moving up and down, like super fast. That's what I like. So they have this 2 hours window. I backtest them always. Because if you look at trading at the end of the day, it's the same guest in different outfits. It's literally the same guest, but in different outfits.
That's a good way to look at it. Yeah.
I try to simplify trading. I try to gamify trading too. I try to make it simple because I just got lots of complexity in my life from my university, from my professional career. So nowadays, just like to gamify it in a way that I'm gonna teach it to my daughter once she's like 3 years old. I'm gonna start teaching her how to trade. And I want to teach her that in a way that it's gamified. So she loves it, She loves it.
I thought about that way back in the day when my kids were young. I was like, maybe I could create a game that is essentially driven by the market and they can get points for it and stuff like that or whatever, an app. And then I can't remember why I didn't do it in the end, but anyway, that's where I sort of got to as well. And even to this day, I mean, my youngest has sat at a computer for 1 hour in front of a chart though, which I was quite impressed with at the age of like 14 or something. So I was pretty impressed with that. She sat down for an hour and literally watched the chart and tried to take a trade. So anyway, let's dive into the quick fire rounds here. It's a fantastic interview so far. We're going to just pick a couple of questions from here. I know you've answered some of them already. So I'm going to just pick probably the one that we haven't had, which is, what strategies do you use to exit or manage your trades?
So I literally have no strategies. I have a system, and my system got lots of strategies in it.
Right.
So I'm not a strategic guy. I'm a systematic guy. That's the way I approach the market. So that's why I say, like, I can literally trade, day trade, scalp, swing trade, position trade, but I can't do those on one account too. I can't do those on one account. So I have system which is chunked into many variations. So
I think I know.
Which I always advise people to do that. I always advise people to do that.
And for somebody who's listening to this going, I don't understand this. How would you explain what you just said around, I'm a systematic trader versus I have a strategy? And I know you've sort of just quickly done it, but in a bit more detail.
A strategy is something that's valid for one event. Good. A strategy is if you go on a war, if you watch all of these war movies, read war books, good, you see all of these war leaders, they create a strategy for that event, right? But where did that strategy come from? It's from their system, from their experience, right? So they have literally like a library of strategies for these wars, right? And then you create a strategy for every event out there, right? So if you look at, I have a strategy. All right, what is my strategy? Then it should be for one specific event, right? I'm trading London, this setup. Then my system brings in another strategy for that setup, which is, this is the way I'm managing my risk in that setup, right? All right, then you have the timing coming in. Okay, what's the timing? So you have lots of variables, you have lots of variables. A strategy is something built on fixed inputs, not variable inputs.
Gotcha. Yeah, okay. I think what we'll do is let's jump into the price chart afterwards and have a look, and maybe we can get some demonstrations of that. Now we'll jump into the last question of the show. I think we've pretty much covered all the other ones. If you could leave our listeners with one piece of advice, what would it be?
Sorry?
If you could leave our listeners with one piece of advice, what would it be?
Trading is real, 100%. Trading is real.
Sorry, what was that word? Real?
Trading is real. Trading is real. You gotta understand that us as retail traders, we are already in a minus sum game. Everything is stacked against us in the market. So my only piece of advice is building a community, good, of being connected with communities, good, with different traders. That's something I didn't have back in the days. And please just practice. Believe in yourself, practice, and study yourself. Trust me, your key is going to be within you. The key that you're seeking out there is definitely within you. You need to study yourself, understand your own behavior, understand the way you react, and the way you respond to these events, when you lose, when you win. If you figure that out and you start controlling your behavior, it's good. It's good. Then the last one would be is just not getting greedy. If you're an employee and you're making $2,000-$3,000 a month, and after taxations, like let's say in Germany, you pay like 20-25%, you ended up with like, I don't know, like $1,900 or euros, Okay, look how you can replace that income, step by step. You don't need to make it in a day. Just take it slowly and grow organically. Trust me. If you overinflate yourself, you can go boom, But if you go organically, you can never go down. Just look at your life as a trend. The trend, higher highs, higher lows, right? Then it breaks the higher high, it goes to a new higher high, right? When it retraces, it goes back where? Your new higher low is going to be where? Your old higher high, right?
Yeah. Okay, right, yeah. That's a great way to look at it. It's a great way to end the show on. Hey, look, Khaled, thank you very much. Before we wrap up, though, what's the best way for traders to get hold of you?
I'm always available on Discord. For my prop firm Discord, I'm always available there. Like if you just tag me, if you pin me, yeah, I'm always there.
Brilliant. Well, look, a big thank you to Khaled here for sharing with us today everything we've discussed. In the links on the show notes, to find them, simply search for Khaled in the search box on tradingnut.com, and that's KHALED. Until next time, I wish all my listeners trading happiness and success. All right, folks, there you have it. Interview with Khaled done and dusted. Now, do remember we did shoot like a 45-minute video where he breaks down his full-on trading systematic approach. It is super, super good. Now, it does take a while to get into it, but once you do, you sort of really see how this guy sees the market and how he's able to get all the way down to a 1-minute time frame entry with a super high risk to reward. So, folks, that's coming up on the channel, so make sure you hit subscribe on that YouTube channel so you don't miss it. And remember, we've got that mystery trader hitting the Telegram TN Trades channel, so go and check that out. We got the Robot Builders Club $10,000 Blue Guardian evaluation offer happening this August if you want to learn how to build trading algos without coding. And we've also got those live streams hitting the channel pretty much every day of the week. All right, folks, have a great trading week, and we'll see you next time.